Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing?
Doing good, doing good. I'm glad it's Friday.
It's not only Friday, Barry. It is May 1st. We're recording about 30 minutes after the close on May 1st, a brand new month. Third of the year is done, as
hmm
April is behind us, and it's May. And everybody in the markets talks about sell in May and go away. That's what everyone wants to talk about. But
hmm
you and I were talking. I feel we feel like it's more appropriate to point out that there's Mayday calls coming out from the Bears after the beating they took this week. And on last week's show, we talked about these levels. We said, look, if we hold certain levels, this thing's going to rally. If the Bears don't get below certain spots, things are going to rally, and the
hmm
rally came to pass. We talked about the grains last week and how the correction was done. We saw upward movement in the grains. Talked about some of the softs. Cotton is the train that keeps rolling,
Yep.
and we're going to talk about a few more. So there's a lot to cover on this show. If you're listening but not subscribing, please subscribe. Make comments in the chat. Set the alerts so you get notification when we put new content. We want to keep delivering you guys all this content. We want to see some growth in the subscribers because that really motivates us to do more. So let's go to the S&P. What a week for the bulls, huh?
And the Bears. What a week.
Oof.
What a week all around.
Yeah.
So, but
I
anyway,
don't know if
that's
I don't know if it's the
uh,
kind of week the Bears want to see most weeks because it was not pleasant for them.
no, no. And here's the daily chart. We'll try to keep it on topic. We saw the low come in back in beginning of April, end of May. April 1st was our big call for the low. Came in, and we were looking to see if we're going to get a lower high because of the bigger cycle high that came in January. But as it turned out, that low had more power than the high that we had that finished up that cycle. So which means when a counter trend picks up with this kind of a steam, obviously that's the bigger cycle. So that's why we thought, well, after we got through the high, well, then it's probably just going to continue to push through, which it's doing. And how far can it push through? Well, we come this far, might as well get to might as well get to 73.50, 73.70 on the cash. Okay. So that's our next target. The thing we have to watch would be the counter trends. Obviously, if you guys are just watching the basic chart patterns, Thursday's low is important. Obviously any kind of a pullback that holds 7100, 7110 sounds like it's a long ways down, but but structurally, if we can hold those, the move is still very, very bullish and the momentum's still intact. That's the that's the thing, right? People can't panic just because we have a 1 or 2 day reversal. Isn't that right, Ben?
100%. Like we were talking during the week, and Barry and I post regularly all week, and I even said, I think it was either on probably on the NQs. I said we had a 2-day pullback and a reversal. I said that's bullish, right? That's normal bull market activity. 1 or 2, 3-day pullback, and then you go again. So
Yeah, absolutely. And all of that while we're holding above, really key levels and 70/30 for the S&P cash. All right. So what about next week, you guys? Well, next week, upside, we have 73.50 to 73.70 is a really good target. Downside, obviously, I'll show you guys why when you guys watch a little bit, when we get into the June contract, you'll see, there is reason to be a little bit cautious. And that's why we said, sell in May and maybe stay to play and not go away because we have both sides that are playing out the first week. It's probably high time, right? So let's just let's watch that. Let's watch it carefully. You'll see as we go through the charts what's showing up. All right. And it has to do with 22 and a half, which is half of 45, which is half of 90, and so forth and so on. So important cycle we're looking at, and that might give cause to sell, which is fine. We can pull back and we can play that side as long as we hold above key levels and can reverse back above important levels. I think the market's in pretty good shape. Obviously, in the bigger picture, as long as we're above 7,000, 70/30, cash is in great shape. I mean, we can carry it all the way down here and everything's just fine. We're in really good shape. Now, when we get to 73.50, 7,400, let's say up in this area, as we get closer, we'll tune it in a little bit tighter. But as we get up there, then, the clock started to tick for a little bit of more of a correction. Now, the fact that we ran so hard for a month means corrections are either going to be steep or the corrections are going to be longer consolidation. So that's kind of what we have to expect. If we get a consolidation in here, that would be great, as long as it's above 70/30. But if we go up into the 73.50, 7,400 level, now we have bigger things to deal with. We have much, much stronger resistance. And coming up in May, we have some bigger cycles too. So for now, we're okay. It's sort of like this is the train to tractor. So, we're focused on that for now. Anything you want to add to this, Ben?
I think it's really important what you're saying, Barry, that there is a cycle. So don't be surprised if we get a correction next week, but it's not one to panic and say, okay, sell in May and go away is the way. Just, dump everything and sit in cash, because as you just said, we could pull back to 7,000 and it's still really bullish if that holds.
Right. So just to be clear, I saw a comment on our podcast last week. Somebody mentioned, well, you guys talk about up, down, or sideways, and then the week after you talk about what happened as if that's the only thing we talked about. And that's probably true because we have to talk about what happened, not the probabilities, right? So when we talk about, upside target, and long as we're holding a certain level, we're expecting the market to go up. Well, that really is the case. I mean, what else can we say? Now, if we can't hold certain levels and we slip below, and we expect weakness, well, that's true also. Both those things can be true depending on the price action. Not to break into a big tutorial, but as long as we, hold key levels, the trend continues. I mean, that's the whole point of counter trends in a trend, right?
Absolutely. And Barry, one of the key things, and longtime watchers don't have to know this, what we use the squares for is to help us assess probabilities, right? They're not predictive. We're not sitting here saying, oh, price is going here. It's the odds of what's happening. When you're above certain levels, the odds of it going higher are greater than the odds of it going lower. When you get below those key levels, the odds flip.
Right.
And that's how you have to look at the market, because nobody knows for sure where we're going.
Yeah. So it's a combination. I mean, if you trade, well, depending on the type of trades you do, I mean, this is how we look at the market. So if it resonates with you, great. If it doesn't, I mean, nobody has to trade this way. I know people that just trade on gamma and they do just fine, But this is just our approach, how we approach the market. And the idea is we focus on the trends and turning points, and we trade the in between, getting back on track. So when I talk about, I mean, case in point, right? So let me just walk through just how we do the cash, since we always open here. So upside 73.50 was target. So upside is good long as we're holding above 71.87. Why? Because that's quarter of the square that we're using. If pullbacks hold above that and reverse, okay, the upside is still possible. Why? Because anybody can see if we hold above that and move higher, you can see that the momentum's not going to die. Momentum's intact. So that's the upside. If we get below that and somehow we can't recover that level, then the market is weak, which is just basic kindergarten level price action. So that's the simple way to read it, because we need to have a marker, right? If we don't use price levels, we got thin air, so we can't use that. So we have to have an anchor. The price levels are anchor. Then we have the price action around it. So that's how we define the frame for every day and every week and time frame. Anyway, I think you got that. I don't want to beat a dead horse here. If you guys have any questions about that or specific questions, feel free to comment, and I'll pick it up and I'll reply to whatever that's there. Go ahead, Ben. What are you gonna say?
No, that's it.
Yeah,
That's
that's
a
it.
great explanation. You
Hmm.
use the levels to assess what's more likely to happen.
Exactly. Exactly. All right. So what's most likely to happen for the S&P? Well, it looks like you'll see. It looks like we can go a little higher, but the reason I go through a number of charts is to show you other cycles that are in place, right? So anything that we talk about for the futures market, it'll also affect the cash market. Of course, we're going to have different price levels, but you guys can just subtract the premium and figure out what that is. It's not too difficult if I mention the level, for example, in the front month.
Hey
All
Barry,
right.
what's
Mhm.
the timing on your 50% of the square there? It looks like
Right here.
mid-May. Yeah, mid-May.
Yep, May 15th, exactly mid-May. Hmm.
There you go.
Hmm.
That's a decent marker to put down.
That's a very good marker because that would be a 45-day run from
Hmm.
that low. So that would be a very good marker and that would be a very good high. But I'm thinking, we might hit it a little sooner, but man, who knows? Let's
We'll
see.
see. We'll see.
I would say the worst case, we want to hold any pullback should hold above, like 21, 71, 27. That would be
Hmm.
Thursday's low. So you guys watch Thursday's low and watch 71.87 just for till we see how we get tested there. If we
Hmm.
continue to move higher, great, no worries. Now, when we look at a 30-minute chart, you guys will see how we kind of step it down to a lower time frame to really bracket the corners and bracket the breaks. But for the cash, that's what we have. Let's move on. So the front month, the interesting thing is we talked about this low enough. Obviously, it's squared out. And from there on, I mean, I don't know if you remember, Ben, but when we came down to that low, everybody was bearish, right? And I
Pretty
and I
much.
and I remember going into that week, our thing was, the theme was like, is it going to be a waterfall, or not, right?
Hmm.
And because of the square. Now we talked about at the time, if the square gives away, well, then we have a whole lot more to go. But if the
Right.
square holds, then we have the upper side levels that we watch to see where the price gets, and that pretty much goes 50% of the time. And that's how we got to the next 50%. So
Right.
once,
Right.
yeah, right? So once we cleared this a couple of weeks ago, that's when I said, look, if we can hold this high, we can hold this, 70.95, this area, basically the high here, or 70.75, this area. I think I had the square here. We can hold these lows, we're going to go higher. That's just how it works. And what was the upside target? Well, upside target was this 50% square. It was 72.77, 72.78. Okay, at the time it seemed like a lot, pretty far to go. But I remember talking about that, um, because where else could it go, right? I mean, the other side is
Hmm.
you lose the square and we come down. But with that kind of structure below that, now we're pretty well established. Okay, now here's the fun part: 72.76. If next week we clear that anytime, it doesn't have to be on Monday, it could be Wednesday. If we clear this and we can settle above it, settle above is exactly right here. You can see starting on the bar on the 20th is what I call settle above, right? We settled above 70.96, basically settled above the high on January 28th. So once we settled above, basic structure, right? So when we started after that last little retest, we started pushing higher. Anyway, the point here is about selling in May. I thought the funny thing, the reason the theme came up was I said, well, actually you might have a reason to sell in May now because we squared out. We squared out at the high.
Yep.
Yeah, right. So okay, so what do we do here? How many ways are we going to slice this thing? Well, it's very simple. It's 72.76 is the 50% level. If we can settle above, we can expect it to go to 74.36. That would be ideal. Now, that exact level is not 74.36, and just so accurate as I ballpark these things. 74.36, yeah, right on. So 74.36 would be the high up there. And you can see, we're squaring out basically right now. This was a square, pretty steep square. Yeah. And it's in 22 and a half days. This is looking pretty good. I like this. I like this square. And we did make it all the way through the full, all the way halfway through the square. I
And
like the whole
look at
thing.
that candle too.
Yeah, yeah, exactly. Like a shooting star, right? So
Yeah.
it looks it looks pretty good. All right. So now you guys have the level on the cash. So the level on the futures is 72.55. If we can hold 72.55, I would expect the markets to go higher. If we stall below somehow or straddle and somehow stall, we can come all the way down to the quarter of a square, maybe a little less, right? That would be 71.67. And you guys know that falls exactly in the middle of the field map, the 30-minute chart that I post every day. And that's between 71.56 and 71.70, 71.71 was sort of the where we've been chopping entire week. We'll look at that when we get to that chart. So that's kind of where support falls. And it's interesting. It just happens to be the quarter of the square here. So that's solid, right? So we could essentially pull back all the way up to here, still keep the entire process intact. Now, the trick is we still need to get above 72.55. The way we look at it, once the market covers one segment, I mean, that one segment could be the entire square, but we are short-term traders. So let's say, at least I go by half squares. As long as we cover the half square, well, we could expect a correction if we can't get through it. That's just sort of how Gann looked at it too, right? 50% of the square. If we can't settle above that, I would expect some kind of a correction. Can it correct all the way down to 70.75? Well, sure, it could. Again, we're not talking, we can do everything. No, it can only do one thing. The one thing is 72.55. If you're trading above 72.55, we're expecting it to go higher. All right. One thing, 72.55. If it gets stuck below, we're testing that and sellers are sitting on the level, then we expect the market to go lower. And if it starts, if we get a reversal here Monday, well, the minimum correction will be down into the 71.67 level. And we'd expect the market to, turn up at that point, right? If we turn up, great. If not, if we start slipping through there, then we have 70.75. So everything is sort of hinging on the levels and what levels we can hold. And I think that keeps it actually very simple. What's the big difference between the last couple of weeks and this week? Well, the big difference is the square up here. Okay, it's 22 and a half days out, 112 degrees in price. So it's kind of a big deal. All right. Anything you want to add here, Ben?
Nope, just that. I think that's perfect. That explains why we said you could sell in May potentially if we get stuck below 72.55, but don't go away because if it does hold these other levels, you're going to see a nice
Pop up.
rally off that.
Yeah. Especially if we correct here before hitting our the main target, right? So on the bigger charts, I do have targets up in the 74.36 area. That's really where I would like to see all this go at some point. For me personally, right? I'm not. If we get there and square out and turn, then I would expect a much bigger move down, like a big old correction. And since we haven't gotten there, although we still have a square here, but we haven't quite got to the target, I'm looking for like a smaller sort of a pullback correction consolidation and then hopefully get there. Now, when would I say, well, you know what? It's not going to get there. That was the high. Well, then I would like to see price getting stuck below this 71.66 level, 67 level, and start getting pushed lower, right? From that point, you have to look at the price action to see what the prices, the bars are doing. You want to look at the pattern, right, in here. Anyway, that's how I would play it. Let's move on to some of the other charts. This is the continuation chart that we follow, is the E-mini continuation chart. You can see, here we didn't hit really an important level. So here is 73.33 is the upside target. It just feels like we have a little bit more room to go on that chart. And this is a continuation chart, again, coming off the April low back in 2025. And from that point, how much more do we have to go? We have 73.62 is the upside target. So you can see the sort of the cluster up there, right? You can play by that. And I would say, the closer we can get to 7,500, the better. But let's just see what happens with price action. So here, what would I say about this continuation chart coming off the April lows? So here we have, the other one we had 71.67. The other chart here we have 71.82. So you can see, where these things fall. There's sort of a range, and you have to know, have them both on the charts and make your decisions based on the levels and the type of system that you're using. Take a quick look at the Nasdaq. Ben's going to cover the daily. I mean, all three: daily, weekly, and monthly. So Nasdaq, we talked about, once we got above this 26,573, it was going to be in a strong position, and it was, ran right up. So where's the next level? We're 180 degrees up from the April low. That would be 28.31, but say 28.28. Yeah, right up in there. So that's the target. If we can get up there, we can push, we can straddle it. But if we can't settle above it, then we're looking for weakness up until that such time. All right. Anything you want to add to this? I guess we're going to cover everything. The weekly. Weekly should be really interesting when we get to your segment.
I mean, it just looks like we got to go up and tap that at least.
Yeah. Yeah. We're that close, right?
Mm-hmm.
So the key again, you guys, you can see all the charts we've been watching so far. It's like, it could reach up a little bit higher. All right, great. If it can do that, let's do that. If it can't, I mean, there's lots of times where a market can't quite reach a level and it'll just, give it up and reverse. Okay, so you say, well, you have any examples? Well, sure. Let's take a look at the high back in October. That's where we got this 26,573. And that would be the target. Can it get there? Well, we got almost to that. Did the outside reversal, inside bars. Well, once that inside bar got taken out, that was a trend, and so that was the part that you trade. And it got very close to it again. Couldn't quite get there, and we sold off. So my theory is if we can't quite get there, it just shows the market's a little bit weaker, right? Anyway, you're going to cover that. Let's take a look at the Dow. So the big deal with the Dow was, look, all the other markets are doing great. Dow's kind of lagging behind. Well, for its part, while the front month was squaring out, Dow put in a little bit of a false break here. So I would say if we can't make a higher high above Friday's high, if we can't settle above Friday's high, and we slip below this 49,484, that's probably a sign of weakness. All right. So no matter what, we can straddle this. That's okay, but we need to reverse and somehow regain this to get the momentum going. So the idea is I want to see Dow trading above this 49,484. That would be healthier. We can settle above Friday's high. Well, we're in very good shape. We got more to go. And those bears are going to be doing a lot more than making Mayday calls, probably firing off flares by that time.
Right.
So yeah, so that's that. Let me get through the weeklies, and we'll take a quick look at the 30-minute. Here's the weekly cash. Last week, we talked about the 72,036 being a target, like that will be important price, and it's a quarter of the square. All right, this is coming from the low in 2020. How far can we go? Well, obvious target is 74.79, but I would 73.61 looks really good, I think. So I would put a line in here now so we can talk about it every week. So 3/8 on a weekly chart is an important level, so we'll watch that. Anyway, we need to settle above 72.36 in order to keep this show going. Whereas pullbacks goes, where's the support? Well, let's just say long as we can hold above this week's low, the market's in very good shape. Obviously, 71.20 will be the level I'm watching for support on the cash, weekly cash. Taking a look at ES. Now, this chart, you guys, I thought, wow, we got it made. Like it's never going to take the circle out, at least not for till fall or something, right? But sure enough, we did it in 1 month. Now, the power of this stuff is basically the fact that we took out something that strong means there's a lot more upside, right? So that's why as soon as we saw the break, it's like, okay, the bulls broke out the upside, and we got the upside. So what I just mentioned on the last chart still holds. You can see how the low this week is pretty much right on the square. So long as we can hold above that level, market strong. So you ask, where's the upside target for this chart? So this is the continuation, 74.39. You can see how the 74 something area comes up a lot, or high 63s. it might sound like, well, that's a big range. Well, at least we know the pressures to the upside, and when we get close enough, as you guys know, we'll nail it.
Hey Barry,
Yeah.
look at the low the week after it broke out too. It shows you how important that circle was. Look at
Oh,
the low
absolutely.
after it
Right
broke
here.
the circle,
Oh,
right
right
on
here.
top of yeah, right on
Yeah.
top of the circle
Yeah.
the week after it broke out.
Hmm.
It tested it and said, "Okay, yeah, that is
We're
good.
going. See you
Give it a
later.
little kiss goodbye."
I mean, this is incredible. So I'm just curious to see, like, what, theoretically, what would happen if we come back into the circle, like let's say we
Right.
get back below 70, 73 or something, and then
Do you
we,
get a super fast move or something?
well, and then we counter trend, let's say we go back up, retest, and we fail,
Right.
what
Right.
happens then? But anyway, for now, we're good. Looks like the upside's where we're looking. And let me look at the Russell 2000, really interesting. We added this ABCD last week with a little target box, and we, we're heading that way. Didn't quite had a little bit of a sell off this week, but if we're gonna go, we can go there. If we don't go, well, we're just right there at the 50% level. I think it's close enough. Not just close enough, it's actually there, right? So the ABCD and the zone just gives us a sort of a target sweet spot for the ABC to finish up. And on a weekly basis, it's fairly powerful. So the point is, if we can get above this, obviously the Russell has a lot more to go, above heading towards 3,000. Now it's stuck at the 50% of the square, 28.23. As long as we're below that, it's a little bit softer. If we're above that, we'll be stronger. So all of these levels that I mentioned at the upside, if we can't take these out, 72.36 on the cash, for example, on the weekly, if we can't take those out, we're going to be, expect weakness. That just makes sense, right? Let's jump to the 30-minute. So we talked about the 71.56, 71 band right there, which I have colored the zone. The idea being, above the zone is more positive, and the target being up here at 72.28. If we're below that, then 71.25 is the important level to watch. And longs are above 71.25. That's the main pivot that we were going to be stronger, and we could be more bouncy than not. Okay. So last week we got above it, got up to the pretty close to the 72.28 area zone, sold off, held the middle, sort of messed around, flushed every which way. And this low is important. We came down in the FOMC, didn't take out 71.25, didn't even penetrate that, which is positive, right? So then we bounced, came back, higher low, bounced, higher low again, and that one we held exactly at the 71.56 level. Once we reversed off of that, that was it. We started moving right through 72.28. And like I mentioned in the post afterwards, as soon as we cleared that, and overnight we held nicely, right? If we hold it, then we can expect it to go up and test the 50% level. And here's the case in point. Perfect. Broke out, held above, tested the high, tested the 50% level, boom. And then it sold off. Well, would you be surprised? Because we talked about how once it gets to these 50 key levels, it's time for a correction, right? And that's exactly what happened. All right, for next week, it makes it very easy. The 72.28 is the key level to watch. If we slip below, get stuck below that, then I think then with the 71.71, that 71.67 level we talked about, all this becomes a big support area. If we really get stuck and we can't take that, we take these out, then we have a bigger correction at hand. But long as we're above 72.28, or even if we dip below, we can recover that, expect the market to go higher. And if we take out 73.10, 7300, 73.10 level, settle above, right? Like you guys know what that means by now. Settle above that, then we can run up into 73, 73. And that gets into the 73, upper 73. So that's it's really, my ideal target would be somewhere between 73, 73 and 74.50. This area would be the ideal target to put in let's say a greater high, then mess around in here. But hey, we could mess around in here and, find out. So starting about 7,300, we have to watch this closely. Sure, we can make the next 100 points that we find, but now we're getting into like some real areas where we have to watch it. Yeah, but I think between these two levels, we can figure it out. If you guys want to follow us, follow on to the next, and we'll keep you posted. See, even the Nasdaq had some upside to get to the key level, right?
Yes, it did.
Hmm.
And we were talking about these levels. We've been talking about them. Last week we were talking about, this 27,177, which is 50% of the square. If we can
Yep.
clear it, right? Because we crisscrossed it a few times, then we cleared it and took off. And now, as long as we're above that level, 28,606 is your next target, which is the full square. And short term, and I do post this every morning, the daily and the 60-minute for NQ traders. I post that every morning so you can sort of follow along how the week is progressing. Short term, we said, okay, if we get below 27,522, which is right here, this is 5/8 of the square. If we get stuck below that, that would be the first, bad sign for the bulls. The real short-term bad sign would be if we get stuck below the 50% of the square, which is 27,177. But let's say all that happens. Let's say next week we get stuck below here, we get stuck below there. We could pull all the way back to this area and it's still bullish. This 26,453 area, because we're going to be sitting on top of, the previous all-time highs. So would it surprise me if we had a correction? No. Do we know the levels where we can say, hey, the correction is probably starting? Yes. 27,522, 27,177. So watch those areas and you'll see. We get stuck below this one. Okay, we might have a mild correction where we chop around here above 50% of the square. If we get stuck below 27, we're going to have a bigger correction because we're going to be stuck below here. And we could, like I said, we could come down all the way down here and test that, that structural support. So let's see. Those are the key levels. And here's your target, right? As long as we're above this is the target,
Yep.
28,606. I want to take a look at this calendar day, Barry, because it has a kind of
Yeah, but that's like
interesting
target
view.
hit. That's what that
Yes.
looks like.
Yeah. So this,
Hmm.
again, like Barry does with the S&P and the ES, you take multiple views to see, what vibration or what cycle might be hitting. Well, this is one from the lows in 2022. It's a calendar day chart. And as you can see, we made a high right on the full square. Now, it doesn't mean, hey, the party's over, short the Nasdaq or anything like that. It's a marker, right? Now we know we got to clear on this calendar day chart. We've got to clear 27,878, or else we're going to get a correction, maybe a quarter square, which would be, you know, around 27,150, or if we do a half
26.
square, yeah, back to that 26. Right. And that would be perfect structure, right? Because look, here's a high. We pull right back to the 50% of the square.
Hmm.
That's a very plausible and possible outcome, right?
Absolutely.
And so this coming week, we're going to watch, does that sell in May thing start where everyone thinks, oh, this is the big down starting. And we're going to look at it and say, okay, yep, I can see there's a pullback coming. But if we get to here and it starts slowing down or reversing, all the doomsdayers are going to be wrong again because then
One more time.
it'll rally again from there. That's exactly right.
Hmm.
So by knowing this ahead of time and looking at it, you can sort of have a plan for when things start unfolding in the market. The interesting thing too, Barry, is I said, okay, where are we? We're at that 22, 23 calendar days, right? Since that low.
Absolutely. Yep.
So is it 100% that we're going to pull back? No. Is there a good chance? Yeah. Yep. And we know the levels to watch now, right? If we
Hmm.
can't get above this, based off of this chart, it's going to pull back. And we had the levels on the daily chart, the trading day chart that we
Hmm.
showed. Let's take a quick look at the weekly.
So if you notice today, we didn't talk about sideways.
We did enough sideways, right?
Yeah.
We're,
Yep.
we're, we're going to be moving for a little bit here. All
Hmm.
right, now let's see. Here's the weekly. And once we broke through, we had a nice circle going here as well, right? 4 touches, right? 1, 2, 3, 4. Fifth touch,
Yep.
it went through and it's no longer valid. But what is it showing us? Once we broke over the half square in the circle, We went up to the 5/8, captured 5/8. Now we went up to the 3/4, and now we're stuck, or we closed right at 3/4, right? So we know we got to clear 27,841 to make it up to this full square. And if we don't, we're going to get some sort of pullback. Again, we could pull back into this 26 area all the way, to 25.9 and still be very bullish. So we'll watch it. We'll just take note of on a weekly basis, you take note of the levels and you say, okay, right now, we stop practically right on it. If we don't clear it, there's going to be some weakness next week. Let's take a look at the monthly. Here's your monthly. It's another thing of sort of clearing a level. Last month we had this nice big up bar, took out the highs, and we've already made a higher high this month. So on pullbacks, right, we're watching pullbacks. If we get a pullback this week and we stay above this 26,796 on a monthly basis, we can clear it. And if we clear it on a monthly basis, it means we're heading up here.
What?
29, 30,000 Nasdaq.
Mm-hmm.
And this one, just so you know, is anchored at the .com low. So it's a really, really big cycle. So we'll see. Anything you want to say about the bigger
About the vertical?
about the bigger time frames here on the NQs?
No, I think everything's on track. We're doing great. We just trade the counter trends.
Yeah,
That's
trade
good.
the levels, level to
levels are
level.
good. Yep. All right, let's move on to the bonds.
Sideways town.
Sideways. Not a whole lot going on, but it's exactly not, it's not in a bull market. So,
And don't get lulled to sleep, man. We keep watching these because out of sideways consolidations come big moves.
absolutely. Again, we're way below the 16.5, 16.12 resistance we had. We broke through, and we're basically, straddling and struggling around the quarter of the square, which is about 13.16, 13.17, and we're below it, a last couple of days. But we're watching, watch the new trend here. We came down, we had the high up here, we get stalled out at 19.16, broke through the square, kind of hung around the quarter of the square, and now it's starting to look weak. If we can't get above this 13.16 level, 13.16, 13.15, look for weak conditions. And the next stop on the downside would be around, 111. Unless we get above that 13.16, then we can look, for the consolidate. Can't really get bullish on this long term until we can, break through this 116.14 level. Take a quick look at the weekly. Here's our 114 level, the key support resistance pivot on the weekly. We spent the week below that. We had an inside bar and we took out the lows. Now we're below. It's probable that we can continue it to the downside, and we also have a little ABCD set up, get us down into the lows. A little too early to sing about it. So, as long as we're below 114, I would say it's weak. We can get above it at some point. Okay, fine, we'll deal with it. But for now, 114, treat that as a pivot. Basis the week. Crude behaved perfectly. We talked about crude being strong above 95, 97, and sure enough, once we popped above it, we stayed above. And of course, the upside pushed all the way to the 112 level. That's where the 50% level is. 112 level, 111 and a half. And now we're perfectly caught in between. Again, I want to just emphasize, as long as you guys remember, above 95, 97, expect strong conditions, and of course resistance going towards 111 and a half, 112. If we can get above 112, then we know $120 crude is over the horizon, right? It's coming up. And to the upside, the next big resistance for squares would go to 126, 127. You heard it here, probably not the first. So there's crude. Let me take a look at the weekly. Crude held pretty well. Here's our 97, it's a quarter of a square. We have 115 is the 50% of the square on the weekly charts. And long as we're above 97, just, it's bullish. Let's jump to the currencies. We'll do the metals afterwards. Dollar, well, we really went up to test the 99.50 level, couldn't quite get above that, sold off a little bit. We're back into this, this 98 level where we have structural support and dip below. It looks like we're kind of in a holding pattern here. It's kind of easy to see. So either we break out about 99.50 or we break down below 98. In between, it's probably going to be just consolidation.
Bonds and the
And
dollar are waiting for something, aren't they?
yeah, they both are waiting for something. And looking at the pattern on both, when they start moving, we're going to move. So just
Oof,
be,
big,
we're going to
big,
move
big.
big.
Yep.
So just be ready for those. And they're not too far away. Looking at the euro, found support close to the 50% level, which is 1640, and resistance at 1790. Those are the two ends. In between, probably chop like we've seen. And that's it for now. For yeah, not a whole lot to add to that. Let's take a look at Bitcoin. Bitcoin, well, we talked about the 68,580. We held above it, moved nicely. Our resistance level was the 79,990, let's say 80,000. And we got there, we tapped it and sold off. So that was a spot. If we're going to push, we can, I'd expect, we can push all the way up to 83. So the band of resistance is right there. There is an interesting square coming up for Bitcoin right around, well, the middle of the month, like you were asking earlier, May 14th here. And the price would be a little bit higher, 82,300. So 82 to 83,000. We can square out in a couple of weeks. In the meantime, let's just deal with the resistance a little bit lower. So 80,000, that's the level. Let's see what price does. It might have a little bit more upside left, but the real upside was between 68,580 and the move up, right? Once we cleared it, the first counter trend held here. We cleared way over here back on April 8th and been up since. Let's jump to the weekly dollar. We're holding in the zone, another zone, 97.80 to 98 a quarter. We're holding in the zone. I think as long as we're holding the zone, it's okay. We can move higher rapidly. Now, if we get stuck below, we'll probably go a little lower. We'll let this finish up. You can see ever since we got to the zone, last 3 weeks, we've been stuck in the zone, and euro's been stuck right above 1654, sitting on top of it. Obviously, slipping below would be weak. As long as we're sitting above, I wouldn't be jumping to short unless it goes up towards the highs. All right, let's go into take a look at the metals. Behaving really well.
Sitting right on that 90.
Sitting on the 90, looking pretty good. I did change the scale, so it's easy for you guys to see the chart and not get insulted. Not that we needed it in here. It was okay. We were just going with the levels. We're holding this 45.73. As long as we're holding that, I think gold is okay. And this did end up becoming a consolidation area. As long as we hold the Wednesday low, I think gold can continue to consolidate up here. If we take out the Wednesday low, we get stuck below the level being 45.73. Expect weaker conditions for gold. So that's our pivot. Looking at silver, we talked about 72. We held it.
Nice.
Yeah, we're basically between 81 and 72. We're trading the range. That's support. You can look for support around 72 and the resistance at 81. Trade accordingly. That's all I can say for now because I think we're going to be consolidating there for a while. But as long as we're above 81, I think we're in pretty good shape. And moving on to copper, I'm using square 60. We corrected quarter square perfectly. We're holding right above 588, 589, and we found support there, bounced a little bit. So I would say, look, we can consolidate above 589, 588. Copper's in a strong position to move higher. If you get below that, I would expect a longer consolidation. As long as we're above that, I think we are ready to move. Yep. Let's take a look at the weekly charts. Here's gold. So gold, 48.15 is the 50% level. We're below that, and we're above the support 43.91. As long as we're in between, I would expect the consolidation. So it's still in the corrective mode, consolidation mode. And once we get above 48.15, we can expect the trend to continue. But as long as we're above 43.91, I'm expecting this to be consolidating. And given the multi-year move up, I mean, this is coming from 2016, right? And you can see the entire chart here.
Mm-hmm.
Very, very. This is when we were really bullish. If you guys go back and listen to the our podcast back in the early 20s, we're also bullish and talking about how this is all going to break out. And well, here we are. Now we're midstream. We're there. We made the big move in consolidating. So that's the bracket for gold. Let's see what happens next week. Looking at silver, I think the daily numbers are the best. We had 72.81. As long as we're above 71, 72, we're in pretty good shape. And basically weekly, we need to really break the 81, which is 84. Basically weekly, get through 84. I think we can continue much higher. So when we say break through 84 or 81 on the basis the daily, we can expect it to continue higher. All it means is when we get to that number, get above it, I think momentum picks up, momentum comes into the picture, and everybody's in there trading it. So, and like here, when we get to support, we reverse, the buyers come in, we push it all the way back to 84, 81, 84 level. But for now, it's consolidating. I think the bracket on the daily will work. Here's a bracket to follow. Here's a weekly copper using the square of 52, the weekly square. We are in a full square, and I think it's clear to see. We want to get above 606, 608. If we can settle above that, I think then we're going to go $7 copper. But for now, we're kind of consolidating. I think in the upper part of the square, 566 to 606. The more space more air we can have on any kind of a pullback, the more bullish the market's going to be. So watch for that. But in general, above 566, we're bullish. And once we take out 606, I think we can expect much stronger copper. And copper might be leading the way. So we'll watch it for the other metals too. All right. I think that's what I got, Ben. Anything you want to add to copper or the metals or anything else?
I really am impressed with how copper's holding these levels on this correction.
Yeah, really well, right? So
it does look like it wants to go.
Yeah, it looks like it's on a much more of a longer term mission here.
Mm-hmm.
And that $7 copper doesn't look out of line, honestly.
No, nope.
We're starting with 6. That's all I got for the metals, and I think that wraps it up. I'll put it back to you.
All right, let's go talk about some commodities now. Let's focus on the grains first. Last week we mentioned the grains and we said, hey, looks like the corrections are over and they're ready to start moving again. Well, we got some movement this week. Let's start with wheat. Nice move out of the correction lows. We went up. We were trying to capture this half square. Didn't quite do it. And the interesting thing too here, Barry, is we do have a 45 by 180 here from this low. Okay. So we may have topped short term and are going to have some sort of pullback. Now, the last time where we had a little square here was 45 by 45, right? And you saw what kind of correction we got. It was basically sideways, right? We pulled back roughly a quarter of a square here, but it was a pretty well contained correction. Now let's see if we don't and can't stay on top of 641, expect some sort of little correction again. And that's kind of how these grains move. But you can see this thing's moving. It's moving higher, but not like the Nasdaq or any of these other rockets that go off. It's a little more gradual. But we're making higher highs and higher lows. Next week, for a daily basis, watch 641. That's going to be key. We'll see how big and how significant that square was that we got there. So 641 is the key level on the daily. Let's take a look at the weekly. The weekly, you can see where the high came in close to this full square, which when you look back, it's been kind of an important spot. Both on the way up and on the way down. So getting a little pause in here would not be surprising. 644 to 681, if we were to chop around in there, and then, break through that full square and sit on top of it. That would be the ideal thing. But you can see when we said the correction was going to be over, we had the reversal. We got 3 weeks up now. So it's acting fine. Just maybe a little bit of a pause as we topped out just under this 681 full square on the weekly. Let's take a look at the monthly. Here's your monthly. Now, the good news here, not only did we have a full month, monthly up bar for April, we are starting in a really good position to clear this full square. Right? We're up here, 636, 640 area. We could pull all the way back to 595 on a monthly basis and still clear this full square in May. And looking back, you can see how important this area was. Going back a long way. So good news is we're well above it. Now we want to see, can we stay above 595 for the full month of May? So that's something we definitely want to track and want to watch. Anything you want to add on wheat?
Well, I think we're on track. Everything's looking good.
Mm-hmm.
We just have to keep trading it.
It's set in motion. Yep.
Set in motion. Okay.
And the pullbacks, while you could say it's frustrating if you're long, it's an opportunity to add or to get in if you're not in, because we're pretty confident that there's a bull market in these grains that's unfolding, and you want to participate.
Yep.
Speaking of bull markets, here's corn. Corn had a very nice week.
Nice correction. Everything's perfect.
Yeah, I mean, look how it progresses, right? This was the low. We pulled up, made the half square, right? Got on top of that, tested this full square, pulled back again, tested it again, and then we go. Here we clear it, and then we go. And now we're back up to another point where it has to make a decision, right? Are we going to get above 482, which is 50% of the square, sit on top of that, and then we can go more. If we get stuck here and we pull back or we have to go sideways, it's fine, because structurally we're still very bullish. Look at the lows, most of this week, right on the previous high.
Yep. Very good.
Everything looks good here. Let's look at the weekly. Here's your weekly, nice little 3-4 week correction. And now we've had, 2 weeks up, made a higher high again on a weekly, right? Low, high, higher low, higher high, higher low, higher high. That's what you want to see. So next, on a weekly basis, we want to see it push up to the 50% of the square, and that's around 517. A pretty important spot. Topped out here, kind of paused on the way down, was support on the way up to the high. So that's going to be a good spot to watch, and a good marker for how strong the market is. Let's take a look at the monthly. Again, another monthly that's set up. Remember, we crisscrossed it the last 2 months. So far in May, one day, but we're above. So we have the opportunity, as long as we can keep the lows above 463, we have the opportunity to clear this level in May. And if we do, as you look left, you can see pretty important spot, right? Sort of the difference between a huge ramp and range bound trading. Every time we get above there, we ramp.
Yeah, well, we're almost on the ramp here.
Let's see. Right. We're close. We're very close. Anything to add here on corn, Barry?
We're good. We're good. Just more corn, I guess.
Yeah. Let's go to the last grain. It's beans. Beans had a decent week. We had the correction sideways, broke out, pulled back, tested that breakout. Now we're pushing up towards 1200. Again, a nice uptrend, nice movements, pullbacks contained, higher lows and higher highs. Let's go to the weekly. Here's your weekly. We got another up week this week. The next big test is 1227 above, and then after that, there's the full square, and that's the big one. 1283 is going to be big, because you can see when you look left, right? On the way down, it was support. On the way up, it was an area where it stalled. So that's going to be a big number. Let's see in the next few weeks how we attack it. But what we want to see it do is go up. If we pause here, have a shallow pullback and then get through and sit on top. And then that's when we can really launch. And again, I don't know if that's next month, next week, 3 months. We'll see. But that seems to be our destiny is for a battle up here at this 1283. Let's look at the monthly. On the weekly, you saw it was 1283. Here, the big level is 1275. It's 50% of the square. Everything looks good on the grains. Be aware that if you could see a pullback in wheat this week. If you do, watch the levels. Find a good spot for risk reward because these markets do look bullish. Anything to add here on beans, Barry?
We're good. I think we have everything we need to know.
Okay. Let's shift over to the softs. Last week we talked about sugar, saying, hey, we squared out at the low, did a little false break. So let's watch sugar this week to see what kind of price action we get. Well, that's some pretty good price action off a bottom, isn't it?
Absolutely.
See, we squared out, had this little false break right at 50% of the square, and then basically every day this week was up.
Mm-hmm.
And we closed on the high of the week. So the coming week, the real important level, 1512, that's this full square level right here. We want to see how it handles it. We closed, just a little shy at 1495, just a little shy of it. So next week we want to see, can we get on top of that, sit on top of it, and stay on top? Because then that opens up much higher prices. And you can see what happened late last year, as we battled in that area, tried, could not stay on top, and then got pushed down to the 50% of the square. Here we got up, and then of course this is how the boys that run these markets work, right? Run it down, take out all the stops, and then run it right back up. That's a
Yep.
cruel move, isn't it?
That's how it works.
That is how it works.
That's exactly how it works. Well, you saw the ES this week. Not
Oh
much
my,
difference.
oh my God, yes. So
Mhm.
1512 daily basis sugar key number next week. Watch that number. Let's look at your weekly. See how the weekly's progressing in relation to the rest of the time frames. That's a nice weekly bar, isn't it?
Absolutely.
Here's a good
Absolutely.
here's a good example, Barry, where we talk about, you got to clear the square, right? Let's say you were bearish and everything was looking good, right? You got stuck under here, you came down, couldn't clear it one
New
week.
low. Yep.
New low, couldn't clear it the next week, closed on the high, right? That's a warning sign, right? And then
Mhm.
what happens when you clear it? Boom. Here on the weekly basis, 16 is the key level, 1601 to be exact. You can see why on the way down, I built a little shelf there. So that's maybe why we got it rejected the first time, but it looks good. I mean, it just looks like this low was rejected and now we're heading higher.
Not just rejected. Every time there's a false break, it's a good low. I
Yeah,
mean, these,
that's true.
that's a good chance of moving. And you can see sugar does it all the time. So
Yep. And there was definitely a false break there. All right. Lastly, let's take a look at the monthly. Here's your monthly. The most interesting thing about this monthly to me is with any kind of strength this month, we're going to bust this downtrend line. And as you've seen in others, like most notably cotton, which we'll see shortly, when that long-term, like weekly, monthly downtrend line gets broken, it's like, a turbocharger to the move. So this is something to throw into the mix and watch on your monthly charts as we can break this downtrend line. It could really, start kicking in the higher time frame momentum. So that's it for sugar. Anything else you want to add here?
no, we're good. Just
Okay.
follow through.
Yep. Let's go to the next one. The star of the commodities recently. Man, look at
Yeah,
this
look at
thing.
that, eh? Break that triangle and boom.
It's relentless, isn't it? Cotton, we were talking about how boring this thing was for 2 years. Sideways, 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 sideways. And then we kept saying, ultimately, sideways resolves, with a big move. Well, so we were watching, we got this false break, and then we got this move started up. We said, okay, it's time to watch cotton. It's time to get involved. It's been going sideways forever. We're starting to get bullish moves. And this is what happens. Last week we said, hey, could have a little bit of a correction. Look at the correction we got. It was basically a triangle around 50 with the apex at this 50% of the square.
Yeah.
And when the triangle breaks, the last 2 days, boom, boom, close on the highs. So we're heading to 85. That's going to be the next decision point. We call these decision points. You can see what happened at the last full square. We gapped over it. The other thing Barry and I were talking about is when you see these kinds of formations in a strong up move, it's generally marking like 50% of the move. So if we've got another square and a half to go, we're talking about cotton up here, 96.42. If we just measure this out and say, okay, this is
Yeah.
half the move, double it, it takes us up to about 96.42. That's the potential we're looking at here. The next level we want to watch is 85. You sit on top of that, then we open up the higher square. Just a textbook, beautiful breakout from a long, long base. And you'll see it on the weekly and the monthly.
And it's not making headlines.
No, nobody's talking about cotton.
Nobody's talking. We're the only ones.
Yeah. So here's another interesting perspective. Could we slow down a little bit? Of course. Right? We're at a full square on a weekly basis. We closed right at the full square. So it could do one of two things. We could gap over it. We could crisscross it for a while. We could pull back. But this is a bullish chart. And we sit on top of this. We sit on top of this full square. I mean, look at all the activity that's happened here. Sit on top of this. It's 94, $100 cotton. Lastly, let's look at the monthly, and I'll show you. This is an example of what happens when these downtrend lines get broken. Look at that. Right?
Like textbook.
As soon as it was broken, the next 3 months we've been flying. We already made a higher high this month. Right?
Mm-hmm.
So here, roughly 89 is going to be a key spot, and you can see why.
Yep.
So we're getting into some tougher areas where it's going to have work to do, but just watch the levels and see if we sit on top of 85, then we can attack the 88 and the 89 that are on the weekly and monthly. Just everything looks good with this chart. So stay with it. All right, last one we'll look at in the commodities is cocoa, and I think it may be ready to motor this coming week. So cocoa we tracked into the highs, and then we had a short coming down, and then we got this square here at the low. We squared out with a false break at the low. And we said, okay, let's start tracking this. We did an ABCD up as the first move. Then we went sideways, and end of this week started pushing higher, closed basically at the highs of the week. This little sort of ascending triangle that we broke may be the impetus to push us up into this 42, 49. That's 50% of the square. First thing we got to do is take out this high, take that out, then we can head up to that 50% of the square. But we had good price action here. I like the way it closed the end of the week on the high. In commodity land, that's usually a good tell for the next week. Let's take a look at the weekly. Now, here's the interesting thing about the weekly. Was watching this 34.14, which is 50% of the square. I said we still haven't been able to get a close over that. We closed right on it last week. This week we got a nice, comfortable close above it. Almost 200 points above it. So next week we have a good chance to clear it. We clear that, it opens the path to 4,500. In this full square right here. So let's watch next week. We want to make sure that the low of next week is above 34.14. If it is, we clear the square, and the next few weeks could be pretty nice moves in cocoa. Get the weekly momentum kicking in. Let's take a look at the monthly. The monthly closed at an interesting spot, didn't it?
Look at that.
There's your full square at 3,600, right? Today we closed at 35.96. So we're definitely going to have to crisscross for this month, but I want to see us again
Or just cross.
Yeah, push above, right? Get above, get us above, give us room to pull back the rest of the month, and then get a monthly print above that. Let's
Hmm.
clear that on a monthly basis, and then we open up, 4,700, which is 50% of the square. So overall, looks good. Any other comments you want to make on cocoa?
Setting up nicely like all the other ones.
All in all, the commodities look good. We had money coming in this week. Stay with them. We'll keep you posted of the ones that look attractive. And right now it's the grains, sugar, cotton, and cocoa. So stay with them. When you're looking at the commodities overall, money's coming into the grains, money's coming into the softs, sugar, cotton, cocoa. The metals are still correcting. Nat gas is trying to bottom, not quite there yet. Crude is in this massive triangle as the geopolitics plays out, but that does look higher as well over time. So just we'll keep you posted about the commodities that are ready to move on this part of the show. And um, the main thing is next week should be an interesting week. There's going to be a lot of activity, like Barry was saying. We could see corrections starting in the equity indices. Know the levels. Know make a plan beforehand so that when the bombs go off, figuratively and literally, you know what to do based on the levels, based on how price acts with the levels. So rest up, everybody, and great job on the show this week, Barry. And we'll see you guys next week.
All right. Good job, Ben. And you guys hit the likes if you guys like our work, and we'll see you next week.
Take care,
Bye
everybody.
bye.
Bye.